So the reason you're failing as a smart money trader is mostly because of inexperience. And what's the best way to show inexperience is trade selection. So it's to my belief that the best way to trade as a beginner is not reversals. You need to stop trading reversals. Best thing to do is continuations. And even me, as a trader that made over 14,000% in the past 2 years, I still trade continuations. Reversals are mostly my second base strategy. I trade reversals secondary. Mainly, I trade continuations. And let me show you why. I'm going to show you why reversals are dangerous. Again, if you're a profitable trader, you have nothing to worry about and you should be already trading reversals. And like I said, I trade reversals too, but as a secondary option. But if you're not profitable and you've been trying to make sense out of smart money concepts for years and still not finding success, this is probably one of the main reasons why you're not successful. So, just to use common sense, you have your supply candle, supply order block. You're expecting price to sell off right here. But think about it. You're trying to stop this entire move by this one candle. You're asking a lot from this candle to stop this entire motion right here. So just by thinking of it in that matter, you should already see why it might be a little bit dangerous. Again, if you have the daily, the monthly, the weekly bias, the session bias, you have a few confirmations on why that institutional candle is verified and validated, and the price approachment is on point, you could trade it. But if you've been struggling for years now, this is probably one of the reasons. So another way to look at it for it to make sense to you, let's say there is $40 in this supply candle. So there's $40 worth of sell orders. Again, this is hypothetical. I know if we're talking about the Forex market, we're speaking in millions, but just for simplicity reasons, let's say there's $40 in the sell. Price comes up here, there's $40 worth of sell orders to push price down. But look at this entire move. As price is going up, price is accumulating orders too. Price buying up here, buying up here, buying up here. Institutions could be also buying up somewhere along the ride to push price forward, etc. So knowing that, let's say they put in $15 right here. Hypothetical, of course. That forced this move. Now, as you can see, the second move is a little bit longer. So they probably put $20 over here. And let's say that you got $5 right here, somewhere here, because of the small amount of like increment moves. These small moves, this could be somewhere around $5. And you can have $5 over here. So this amount is already more than the $40 that you have to push price down. And as you can see, price has already been pushed down significantly here, and they used this exact sell order to push this entire price all the way down here, but price found resistance over here. This demand candle pushed price forward. So there's a lot, there might be more buying power here than the selling power over here, just by taking a deeper look. So again, you're asking a lot from the price to call out a reversals. And even me as an experienced trader, I only trade reversals when they're at a high of the day or a low of the day areas. I don't trade them without any extra context. Just because of all these reasons, you could be asking a lot from price to reverse. But what you can do is you can get in a continuation and ride along with the trend. You can take advantage of this trend. And let me show you how you can turn this reversal setup into a continuation setup. So I'm going to show you how to make this supply candle, supply zone reversal that you anticipate here and turn it into a continuation. So let's say this candle has three dollar signs, three sell dollar signs. So for price to push, these $3 signs is what this area contains. So for it to push price all the way down here, this entire move is, let's say it cost $2 signs. it costs $2 to push price down. So as it came to push price down, obviously it took $2 from the initial three to push price down. So now you lost $2. So now this area has less money because it used that money to push price lower. So now when price approached the demand zone, what happened? The demand zone had money, so the demand started pushing back. So let's say the demand pushed back, and by how much? I mean, it stopped this entire move. So let's say it used $2 to push price up. So as price continued, people kept buying. The institutions kept buying. So more buys, more buys. So by the time it got up to here, we can tell that this supply zone is getting overpowered by the demand zone, because the fact that this demand zone stopped price right here, it stopped price completely right here. It used money to stop this price, obviously, which would be our $2 right here. And as price kept going up, orders kept adding, buys kept adding to push price higher and higher. So by the time price got to our supply zone, it reacted a little bit. When it reacted for that one last time, it lost our last dollar sign right here. So this small reaction right here was the final straw. This small reaction right here from our zone was the last straw, and we lost all our supply candle liquidity right here. We lost all that liquidity. Obviously, we lost $2 throughout this move, and then we lost our last dollar sign with this last bounce. So what happens? So when price revisits this area, there's no more money left in this supply zone. Is zero. So we expect price to run through. So this way you can get in a buy right here or right here and have your stop loss at the last swing and get along with the trend. Get in a buy with the trend, with all the money that's being injected. Why? Because you will get in with the institutions. The institutions are buying right here. You might as well buy with them. Why go against why stand in front of a moving truck, basically? That's what it really comes down to. You don't want to go against the institutions. You want to ride along, and a continuation is way better than stopping an entire move. So here we have our supply candle. Let's see. Like we said before, we need a mild reaction from that zone. And we got our reaction. So what is our next clue? So here we have a micro demand candle. Now what happens? If price breaks this candle, so let's say price breaks this candle and comes back, it might just want to revisit this area and use the leftover liquidity here to push price lower. Why would this break be significant? This break would indicate that there's so much money in this supply candle that even this demand candle has no chance, and it broke. So when price comes back again, there's still some money left over to push price lower. But if it doesn't break, if it doesn't even approach it, doesn't even get near it because it doesn't have enough power to get near it, or let's say it uses it but doesn't close, or uses it and bounces, that means that there's not enough money in this move right here. And like we go back to our dollar theory, let's go back to our dollar sign theory. Let's say there is $1 sign over here. The fact the price wouldn't be able to break this level, that means there is more green dollar signs over here. What does this indicate? That indicates that this area has more money than that area. So just using common sense, when price comes back from using this money to come back up here, there is going to overpower this area because price already used this dollar sign to push price down. So when it comes back here, this buyer area is going to overpower. And what was the clue? And what was the clue? The clue would be the bounce. So you see, price didn't close and came right back into that area. So what does that bounce indicate? That there is way more buying power than selling power. So all you need to do now is put your stop loss to the last swing and maybe take it right above the last resistance point. And that's it. This will be your continuation. It's that simple. So follow all these steps and you will find success with smart money concepts. And make sure you like, share, and subscribe, and comment. Comment what videos do you guys want me to cover next. I have 2 courses ready to go. So I have a liquidity course and a stop hunt course. A liquidity course would cover all the major concepts of liquidity, and the stop hunt course we would cover how to enter using the purge, the aka turtle soup method. So yeah, comment which one you guys want first, and I'll make sure I drop it. Thank you.